Hello everyone and welcome to our 10-month live stream. Super excited to have everybody join us on this Sunday. And obviously it's a very exciting time for us because the PMS has crossed 10 months now and a very interesting set of results have come out. So in this presentation, I'll be taking you guys through everything that we have been doing, how the performance has been, and everything else about the Wright PMS. Um, so we have a few people who joined us already. We'll just wait a couple of minutes and maybe let more people join in, right? So I have a quick presentation here for you guys. We'll be talking about the results in our PMS. We'll be talking about you know uh, what interesting stuff we have done in the June quarter and what our outlook is for the next few months, right? I think right now when we meet the people who are looking to come into our PMS, a lot of them have that question, right? That is it the right time to invest? Is it the correct time to top up your investment? What do you think would happen in the next few months or quarters? Where should we be investing? So we'll be trying to answer all of this in this presentation, right? Perfect. All right. So without much ado, let me take you guys through a quick presentation. Uh, See, it's been 10 months now. We started this PMS in August of 2023. So it's been 10 months, and the PMS, especially the factor fund, which seems to be a lucky strategy, has done 70% in terms of returns. Our AUM right now is close to 200 crores, not crossed 200 crores yet, but it's very, very close to 200 crores. Um, and June has ended up being a very, very interesting month for our strategies. We have done 9% in terms of returns for the factor strategy, and we have done incredibly well for other strategies. Also, what's very interesting in this quarter is that in this month is that we did excellent risk management, right? So I think returns is something that a lot of people can do, but risk management is where uh, your real expertise sort of comes out, and we have shown that we do good risk management by what we did in this quarter. Again, if you look at our exposure right now, we have a lot of large and mid caps in our portfolio. And what we have showcased is that our performance remains stable across different scenarios, right? So we are not biased towards anything, and our performance remains stable across different scenarios, right? So that is what we have sort of showcased. Now let me sort of take you through the recent performance. So first of all, before we go there, let's talk about our three strategies, right? So we have three strategies. One is our factor strategy, which is a multi-factor fund where we're combining multiple factors. Then we have a momentum strategy, and then we have our alpha strategy. And everything that we do is quantitative, right? So let me take you guys through a small slide that I sort of created where we talk about what quant investing is, right? So quant investing, a way to understand that is that we are trying to do the same thing that any other investor is trying to do. We are trying to invest into stocks that will give us better returns. We are trying to reduce risk, but we take a scientific approach to investing where we use statistical driven methods to find inferences, so not just take any ad hoc decision, but actually analyze that through statistics and take decision based on that. We optimize our risk and reward performances. We remove human bias by being purely systematic. We have a step-by-step systematic process. So everything from how stock is selected, how risk management is done, to how actual allocations happen is systematic. We're able to work with large data sets, and the whole process itself is enhanced by can be optimized using AI-based methods, right? So in our first strategy, which is a factor strategy, we try to break down the stocks into an list of factors, right? So why does a stock do well? Is it momentum? Is it quality? We sort of try to break it down using the set of factors that we identify. Then, we have the second two strategies which are purely momentum. So here we are just investing based on the trend in the market, right? We all know that momentum tends to be very strong factor in India. We've all seen so many new mutual funds, ETFs being launched, which are following the momentum factor, right? So that is something that we exercise in these two schemes. So one of them is a 20 stock scheme, so it is slightly diversified. Then we have the concentrated high risk alpha strategy, which only has 10 stocks. If you look at the performance, you will see that the factor strategy has done the best. It's done around 70% returns in these 10 months. Our alpha strategy has done around 50%, and our momentum strategy has also done quite well. Now let's go over the performance of each of these strategies. Let's look at the factor strategy. As you will see, it's the best performer. It is a lucky charm. And you will see this one has done 70%, has been very, very consistent across the time. Even during the volatile times, it has been very consistent, and it showed excellent risk management around this month, right? When there was a lot of volatility around the elections. We are actually closing June with 9% numbers. These are not audited numbers. Audited numbers probably come in 5, 6 days. But based on the data that we have, it looks like 9% is what the returns are. And then, we have done extremely well in terms of performance, but also done great risk management in different months, right? Second is our momentum strategy. In our momentum strategy, we again have had a good month, right? We've done, I think, around 7%. Uh, and then, we've done great with this strategy also. The performance remains strong, risk management is good, and we're sure that it will catch up in due time. And alpha strategy again is having a good run. Last 3 months have been great. It's a high risk, high return strategy, right? So the risk here is slightly higher, returns are also higher. So if you will see, February, March were slightly high risk for this strategy, but then the returns have come quite well, right? So, a strong strategy with a great potential in the long term, and a slightly high risk strategy, like how we explain this one. So this is about the performance of all of the three strategies. You will see that obviously a factor has done the best performance, right, in this month, but then our alpha and our momentum have also done very, very strong in terms of performance. So June has been a very, very interesting month for the Wright Research PMS. So see, with our strategies, we try to break down the stock market, the stocks into factors, right? We're trying to analyze what is working in the market right now. So if you look at it, we're comparing three major factors in this slide. One is momentum, one is value, and one is quality. What you will see is that momentum has been the best performing factor, right, across all the three strategies. You would see that here, even in the quarterly basis, half yearly basis, monthly basis, momentum has done strongly. In quality has done strong, but it has sort of lagged in the last 1 month because momentum seems to have taken over. So in right now, if you ask me where the focus is, our strategies are fully allocated. We have 100% allocated to equities in our strategy. Momentum has a strong presence, and even we have allocation to uh, cyclical sectors. We are betting on the infrastructure manufacturing theme, but not through highly valued stock. We have a lot of private plays and a lot of diversified exposure. Energy transition is a theme where we have a strong presence in, and that is where we are allocated with these strategies. We are also looking at quality a little bit in terms of our allocation. Now, so that is how the data tells us where the allocation goes and how we are allocated. Now let's talk about what we did in this month, which was extremely exciting. So we all know that the election results came out on June 4th. And if you can go and check various different strategies and PMSs, and you would see that we were in fact the only ones who did a good risk management in this period, right? So uh, this is the return of the portfolio. The yellow one is the portfolio, and this one is the index. So you would see that when the markets crashed, on June 4th, we were the only guys who were sitting on some cash. We were the only guys who were hedged. So when the market crashed 6.5%, we were the only people who only saw 3.7% correction, and then we ended up buying a lot of stock at the bottom and had a very good resurgence. So see how we handled it. We have a couple of graphics here. You will see that our strategies had 10% cash in May, and then around 30th of May, we started increasing our cash exposure. So towards third and fourth, we were almost 27% in cash in our factor strategy. And then we also had these hedges. So these were this long dated put options that we had bought. So you would see that while the put option values remained stagnant, there was not a lot of movement. The moment the market that crash happened on 4th, you would see that the values of these put options went up 4x in a single day, right? So if we were not hedged, we would have seen a 4.5% correction, but because of these hedges, we saw around 3.5% correction. And then we ended up buying almost 15% of the portfolio value on 4th, and then we quickly went 100% into equities in the next couple of days, right? So, I think amazing example of risk management, and you can see that we actually added 3% in terms of alpha over the benchmark only on this single day, right? So, so I think it's an excellent example that we keep on saying that we do have a strong focus on risk management, and because things are in our hand in this strategy, we have ended up doing great risk management here, right? Now let's, having talked about what we did and what worked for us, let's go over, what is the outlook in the next few months, right? So, we'll quickly take you guys over, the macro situation, what we are thinking about. I know that a lot of people, uh, have this concern that is this the right time to start the PMS? Should I be allocating to the PMS right now? Should I be topping up the PMS right now? What happens in the next few quarters? You keep on hearing random people come up with noises, ki there's some correction or, crash that might happen. So, what is the outlook that we expect and how we are allocating? That is something that we would like to talk about in this presentation. Talking about the macro rate scenario, you would see that the first impact, the important thing, in the market right now is the rate cut expectation. Obviously, the US market is coming with a lot of noise. We all saw the debates that happened, a couple of days back. Uh, you know, Biden seems to have lost a little bit of ground to Trump in that debate. But irrespective of who comes, which is Biden or Trump, because the policies that they follow end up being similar, what is more important is when the rate cuts would come, right? Rate cuts are the biggest cue that we are waiting for as investors, right? When the rates are cut in the economy, that would take out a lot of money that is sitting with the US dollar or the US Treasury. It will come down to the broader economy. It would come down to emerging countries like India, where people expect higher returns. Borrowing costs will go down, and RBI would cut rates. So banks would have a great time. People would borrow more. Housing finance would do great. Real estate would do great because people will borrow money to buy real estate or buy cars and other consumer items. So it's a great cue that is going to happen in the market. But then the date for it is not set. It's not set in stone when the rate cuts happen, right? So if you look at the data, you would see that a month ago people were expecting the rate cuts to not happen in September, but right now a lot of people expect the rate cuts to actually happen in the September quarter, and which is a great sign. And market is taking it positively. The only worry here is that these rate cuts get delayed by a long time. They don't happen immediately. They happen after a few months or quarters, and they end up impacting the economy in that sense. So when these rate cuts happen, that would be an important cue to watch. And right now things look positive because there is the great probability that the Fed cuts rate before the US elections or after the US elections, uh, which would be quite important, right? Now talking about the second thing. So, one big important thing which is coming is the rate, but second important thing is uh, the earnings and the valuations of the Indian economy. So earnings are going to start in the next week. We are going to start with the tech earnings, which come first, and the new earnings season is going to come up. I think expectations from this earnings season are still similar to what we saw last quarter. You would see that no exceptional numbers are there in terms of expectations. You would see uh, similar to, we're starting with a strong base of 2024. Therefore, FY25, people are expecting those expectations to moderate a little bit. But even still, your valuations are a little bit expensive. You're seeing, our Nifty valuations are expensive than what is out there in the broader in the global market, and people have a little bit of concern about it. But because of the positives, which is uh, strong growth in India, emergence of so many different sectors, industries, from energy transition, manufacturing to the strong consumer base. India definitely looks interesting and commands this valuation. Now, another important theme that we can talk about is, the which sectors are looking interesting right now. So this is a very interesting graphic that I pulled out of the CMI website. You would see that seasonally, FMCG tends to do very strongly during the June quarter, right? Whenever, probably because of the monsoons, because of the seasonal patterns, June typically in the last 4 years has been a stronger quarter for FMCG margins, right? So FMCG stocks actually would be in demand if you go over the patterns, right? So a great time probably to look at FMCG, and also the Indian budget is going to come. An Indian budget, which is will be the first budget of this new government, will be very interesting. Right now, people thought they will continue the same policies as the February budget, but now government also has this dividend that it got from RBI, and people are speculating that the government could use that budget to either allocate to, again, the infrastructure, defense, railway spending, or actually do some welfare spending, because there is a lot of discontent among the rural population towards the present government, right? So if the rural spending happens, then you would see FMCG companies, agri-tech companies, agricultural companies, fertilizers do really well, and that would lead to a lot of sector rotation. What that means is, the focus shifts towards these companies instead of the infrastructure companies. So the stocks that are highly valued in that space could get a little bit of an impact, right? So FMCG definitely looks very interesting to watch out for in this quarter. Second thing is the energy transition theme. I'm sure if you guys are following us on YouTube, you saw our video on energy transition, on the renewable sector. The government of India has a focus to bring green power 5x in the next 5 years. So that seems to be the focus area for the current government. And we are seeing stocks that are actually in that theme do really well, right? The strong performance of those stocks which have followed along with the energy transition theme. And even in our portfolio, right, when we actually go and look over it, so many stocks that are coming up are actually part of the green energy or energy transition value chain. And so this is a very interesting theme that we think we have to watch out for. Uh, Obviously, well, we do have to watch it for this theme, but there is a little bit of overvaluation that is happening in this theme as well, right? And that is something of a concern because, if you actually go and check the patterns for the US renewable sector or the US green energy stocks, you would see that they saw a crazy run after 2020, right? Everybody was jumping on the renewable sector. Then they hit a peak somewhere in 2022-23, and they have not yet recovered, right? So I think the frenzy that if whenever a stock or sector goes through that frenzy environment where everybody is jumping because they think that sky is the limit for the stock, there is an end to that frenzy, and that end to that frenzy comes in very very minor ways. A company that is growing at a 100% rate, the moment it goes to 30% rate, people get angry and they start dumping that stock. So, we have to be, while this theme looks very interesting, we have to be very, very watchful of the valuations as well, right? Talking about, again, themes to bet on, I think private versus public bank is a very interesting theme. If you look at the performance of the PSU banks versus private banks, what you would see is that PSU banks have actually led private banks by a good margin in the last 1 year, right? PSU banks have given 79% returns, whereas private banks have only given 13% returns. And this is quite interesting because PSUs, why are they being bought so much right now? It is because their loan books got cleared, and they become undervalued because the EPS numbers really increased. So that's why PSU banks became very interesting, and they've seen that good performance. But if you go and actually look at the private banks, what you would see is their fundamental performance, right? Their fundamental performance itself has been much stronger. Um, the fundamental performance has actually been much stronger for the private banks, right? So that is what we've seen in the banking segment. Now, if the fundamental stock performance of the private banks has been stronger than the PSU banks, then we expect private banks to do better than public banks after some time, and that's the trend that we've seen. If you look at the data after the elections, right? If you look at this data, you would see that private banks have actually taken over public sector banks in terms of performance. I don't know how long that lasts, but this seems to be an interesting view and an interesting data point to watch out for, that private sector banks could actually take over PSU banks and the private sector banks and PSU banks both. If you look at earnings, have been the most interesting, the most strong earnings come out from the banking segment. So, and the banking segment has underperformed the broader market for a while. So we could see resurgence of the banks also come up in the next few quarters, right? So very interesting thing to watch out for. And finally, a big theme that all the retail audience seems to be on a frenzy about is the defense, railways, and the uh, and that theme. I think if you look at the patterns for the defense and railways, you would see again there's a frenzy buying that's happening, right? And this frenzy buying that's happening is happening because again, loan books have been cleared for some of these stocks, strong order books, because the government seems to be trying to boost our uh, defense exports, and these companies seem to be getting a lot of deals. And if these companies get a lot of deals, then their order books are strong and their earnings are jumping up, and their earnings are growing at a very, very fast pace right now. And people have gone into a frenzy to buy these stocks. But what would you notice? What you would notice is the moment, again, similar to the theme that we were talking on the energy transition, that right now the earnings looks extremely interesting, the order books are extremely strong. But the moment that sort of pauses, or there is an outlook that that is going to change, you would see that bigger corrections would happen in these stocks, and there would be big reactions because of the frenzy that has already happened. So I think we actually have to be very, very careful about the valuations of these stocks, and make sure that we are understanding the patterns, the overvaluation patterns for these particular stocks, right? So a strong set of numbers have already come in, but like we said, budget is a very important signal that is going to come. Budget is something that everybody's going to watch. And if in that budget, the government says that our focus is shifted toward welfare instead of infrastructure, that would impact the performance of these stocks. If the focus continues to be in infrastructure, then again, we would see continued performance from these stocks. So a very, very high beta segment and extremely overvalued at these levels. And we definitely have to be watchful about what's happening before we allocate to these stocks. So in our PMS, we don't have a lot of defense and railways exposure through the public sector stocks. We have some private sector stocks in the same segment. I think betting on that gives you a much more stable, much more diversified exposure. And along with it, we have a bunch of stocks again in the infrastructure manufacturing theme, which is a strong theme, but we are slightly staying away from this highly valued high beta set of stocks that seem to be moving very very drastically in the market. But yeah, I think see, that is a quick overview of our outlook on the market. Let's go over our allocation in the PMS once, and you guys saw the performance numbers. June has been a great month, and in this great month, the best thing that we've done is the risk management around the election times. Now let's go over the allocation once. If you look at the allocation in our factor strategy, you would see extremely diversified. You have, like I said, the the cyclical sectors, right? The manufacturing, consumer durables, capital goods, engines, electrical equipments, even metals, right? So all of those stocks are part of our portfolio, but along with it, you have some chemicals, some finance, you have autos, you have consumption, textiles. So it's a very diversified set of stocks that are part of this portfolio, and very strong allocation, which I think is not highly skeptical or very very high beta. The beta in our portfolio is actually less than one, right? It's not a very high beta portfolio, even though we seem to be betting on these interesting themes, right? In terms of our exposure, you will see we have large and mid cap exposures, so not extremely highly allocated to small caps right now, and quite well diversified across these themes. In terms of momentum strategy, you would see again in this strategy we have a lot of electrical equipment, mining, auto ancillaries, airlines, and along with it, we have pharmaceuticals, we have telecommunication, we have airlines, and we have IT. So a very good mix of stocks. We also have large and mid caps as a healthy mix in this portfolio. Our alpha, our momentum and alpha are a slightly similar portfolio. They're both following the momentum theme, so you would see some overlap of stock between these two strategies. In our alpha, we have again pharmaceutical, steel, airlines, engineering, diesel engines, and a very good set of stocks, diversified across large and mid caps. And we think our allocation is quite strong, that will hold strong in any sort of volatility that comes in, right? So that is broadly about our allocation, and let's go over the performance of the strategy once more. Again, great performance by our strategy in this month. I think, in terms of outlook, budget's going to come where, we might see some sector rotation, or again, the same patterns could continue. FIIs are putting in money into the market. The outlook for India is strong. The rate cuts are probable in the next few months. So I think right now is a good time to invest. Obviously, you could wait for some correction to jump in, but I don't think uh, there's a strong queue for any big correction right now. So the markets could stay strong in the coming few weeks. And I think if you want to start investing with Wright Research and Wright Research PMS, I think right now would be a great time for you to allocate. So with that, that's a quick end to my presentation. We have a set of questions that our audience has put in uh, into the into the form that we floated, and then we also have a few questions that you guys can put into the chat. So let's go over that. Shivam, are you there with me?
Yes. Hi, Sonam. Thank you for that. I have a couple of questions. I will club couple of questions because they seems to be similar. So, to
Mhm.
start off with, I have a question with respect to Alpha Prime as a strategy.
Mhm.
And if you could put some light of what the strategy is, what is the basis of the strategy, and can investors expect the strategy to work in a market which is sideways to bearish? And there also a question with respect to the very same Alpha Prime. The investor would also like to understand that he's an existing investor in Alpha Prime, and what can be expected out of this particular strategy for foreseeable future.
Right. So Alpha Prime is a momentum strategy, right? So it's a high risk momentum strategy. It's a concentrated momentum strategy. So what we do here is we are trying to allocate on the momentum theme. So not just price momentum, not just because of prices, but also because of expectations. So we have data on analyst recommendations and how they're changing. We are including that into our portfolio, and that are two three bases on which we select these stocks. So typically, you would have 10 stocks form the basis of this portfolio. Let me take you guys through maybe a quick expectations from the alpha PMS, right? We're talking about the PMS right now, so I'll just go over that, right? So, so I'll show you the performance of the alpha PMS on the screen right now. If you look at this, you would see that the alpha PMS has done quite strongly. The performance has been more than 51% in 10 months, and obviously it's a high risk strategy because it takes exposure and momentum, right? So the strategy would be allocated totally to momentum uh, across the time, but then in times of higher risk, we'll take away some money, put it into cash, and we'll use hedges to hedge any sort of risk if we foresee that in the coming time, right? So it's a allocation to momentum along with hedging or some cash. In terms of our expectations, here expectation is great returns from this strategy because it is concentrated momentum, right? So let's look at last 10 years. Last 10 years have been very, very strong in terms of momentum, and a concentrated momentum would have a faster return. Let's imagine if you have only 10 stocks, then the moment one of the stocks rallies 10%, your portfolio is up 1%. But if you have 100 stocks and one stock rallies 100%, 10%, your portfolio is only up 0.1%, right? So having concentration and fast moving stocks gives you sharper returns, right? And that's what we are trying to do with Alpha Prime, that find high momentum stocks that suit the bull market, right? Whenever we see that, and we get faster returns out of it. Along with it, obviously, there will be sideways market for this strategy also. What we've seen in our analysis is that in sideways market, let's say 2020 or 21, 22, whenever the market is sideways, the strategy tends to do better than the market, but obviously it's a high risk strategy, so it sees slightly higher risk as well, right? So that is our understanding on how the risk and the rewards for the strategy would vary, right?
Also, just an additional question on Alpha Prime. Uh, if you could also give us what exactly do you target as a return in Alpha Prime? What and
Right. Yeah. So in terms of returns, let's look at this. You would see that our return expectations are see a little bit insane, which is 50%, right? Which is and this expectation is formed because of the analysis of the last 10 years, right? Because the last 10 years have been high momentum, and our considered momentum strategy would have been 50%. So if the next 10 years is similar to the last 10 years, then that is what our expectation would be, right? And the risk would be higher than the market, but even the drawdowns will be lower in comparison to the market.
thank you. Now we have a question from Dr. Vivek. He says he's a existing Right Titan subscriber, small case, and he's asking, is it a good time to add funds, more funds to this small case? And he's also, subscriber of Alpha Prime and Titan using small case app, but not able to, where exactly would he be? So it's a little operational question, but he would like also
Hmm.
to know that where can he see? Why is he not able to see this these stocks in Wright Research app?
Uh, I mean, that's an interesting question. See, I think you can definitely top up Right Titan or Alpha Prime. I think these are very interesting portfolios, and they seem to be doing very strongly. And we, like I said, our outlook is strong, so you can definitely top up these portfolios. Why can't you see them? I think if you subscribe through Right Research, then you can see all of that in the Right Research app. They don't think that should be a challenge.
Thank you. Also, we have a question from Kripa. So how many stocks are usually in your portfolio? What is the portfolio turnover ratio? What is the impact on yearly short-term, long-term capital? So I'll ask two question and then I'll repeat the third question thereafter. How many
Okay.
stocks are you usually have in the portfolio, and what is the portfolio turnover ratio?
Right. So in our factor strategy, we have around 20 to 25 stocks. In our alpha strategy, we only have 10 stocks. In a momentum strategy, we have only 20 to 25 stocks. So concentrated in a bit in terms of what's the second question?
Portfolio turnover ratio.
Right. So portfolio turnover ratio is between 200 to 250%, right? We are active strategy, so we do change our allocation with time. So it's an active high chain portfolio, but then there is no sort of it's not extremely high churn, right? So quant strategies typically, active strategy typically are not buy and hold, right? We don't buy stocks and not sell them. We actually change our allocation with time, but it's not like too much turnover. We do, keep a control on the turnover that we have, and it's between 200 to 250%.
And the third question for this from the same investor: what is the impact of yearly short-term, long-term capital gain tax for us?
Right. So because it's a high turnover portfolio, you would see that around 70% of your gains will be realized. 70% goes into short term and around 30% goes into long term. So all in all, you would have around a 13 to 14% tax liability, right? Instead of a 10% that you get with long term.
Right. Thank you. We have an operational question from Kailash Ji. He says, "How? What is PMS? How does it work? On which platform does it work? Does it work from Smallcase or another platform?" And
Hmm.
some operational questions like that.
Right. So, see, PMS is a portfolio management service. It is not on small case yet, but PMS is something that you can directly talk to us and subscribe via us. See, how PMS works is that it's like a managed account, right? So typically, you can, if you like what we have to offer, our strategy, our performance, then you can give us a account to manage. Basically, what that means is that we sort of get access to your portfolio, your demat account, and we are given the access to trade on your behalf, right? That's how sort of PMS works. So it's a managed account. It's highly secured. It's SEBI regulated. You have a custodian backing that structure. So, funds are extremely secure. But we as fund managers get full access and full discretion to execute on that basket and take our calls. And so that's how we sort of work with the PMS. If you want to start with us, you just have to let us know. There's a digital onboarding process through which you can start this and uh, seamless sort of journey. You will also have access to relationship managers from my teams who will be guiding you throughout the whole process. And it's a more high touch, more high engagement platform, right? Where you'll get active advisory and active access to our team.
Thank you. And we there are a lot of questions from investors who would like to understand, since this is a market which is already at all-time high, they would like to understand would this be a right time if they would like to top up in PMS? Would this be a right time for them to do that? And how, even if they do, how would you allocate those funds?
Right. See, I think we definitely think it's a good time to allocate to the PMS, right? I think the performance, like we saw, June has been incredible. We saw 9% growth. In terms of the next quarter, again, we expect it to be strong. We expect themes like FMCG, themes like energy transition to be strong, and obviously, what we expect the next few years to be strong as well. Again, we're not saying that our stocks that we have bought right now are the ones that would continue for the next 1 year and will do well. We keep on changing and reallocating our portfolios also, so things change. But we think there's so many opportunities in the market, and there is no reason for you to not invest right now. So if you are planning to invest, right now is a good time for you to allocate. And if there is risk, if there is any sort of risk management that has to be done, we would be there handling that, and we would also be ready to sort of allocate to change our allocation to risk management and make sure that we're doing well for your portfolio. So I think it's a interesting time to invest, and I would recommend you not to withhold your investment right now. I think many of our investors are taking active bets, And like I said, we are not, see, there are certain pockets in the market which are overvalued, right? So let's talk about the defense and railways basket or some of the stocks, even in the energy transition theme, which have become extremely overvalued. So those stock sectors could see a impact, right? When, if anything changes, let's say something changes in the budget, uh, and those stocks get a hit, or let's say there's something that happens to the government, that could take a hit on those stocks. But then there are other themes which are very, very strong and that will continue to do well, right? So I think good time to invest into the market, and we actually have to be careful about certain sectors and themes, but no reason for us to withhold investments.
Thank you. Those are the only set of questions that we have. Uh, in the meanwhile, if you'd like to give any closing remarks and what are your expectations from the market?
Yeah, definitely. I think, it's been an amazing set of 10 months for our PMS strategy. We're touching close to 200 crores in terms of AUM. We've seen very good sort of adaption and very, amazing set of investors who come and invest into our strategies. Performance has stood out. We have done close to, more than 70% in our factor PMS. And this is all net of cost returns, right? Along with it, while performance obviously has been good, we've done excellent risk management. In terms of risk management also, we have sort of stood out. We have made sure that, there's a great example of what we did in June 4th, which stood out in terms of our risk management techniques. So I think, Right Research PMS gives you the whole set of features from strong performance to strong risk management. And I think it's a great opportunity in the current market for you to grow your wealth, to come along and join us in our PMS. You can go to our website, right, rightresearch.in, find the portfolio management tab, and there just put in your details and book a call with our sales team, and you will get access to our team, and they'll explain to you more about the strategy and you can get started. And so that's broadly what I had to talk about the right PMS. But obviously, in terms of you know the market, I think the market is strong and we'll see strong growth coming out in different sectors. There are certain pockets which are overvalued, but then we have diversified our exposure away from those factors, those sectors. And yeah, we are excited about the market, and that's broadly what I had to cover in this particular presentation and particular session. And thanks a lot, everybody, for coming and joining us on this Sunday. I hope you had a good overview of our strategies, and we look forward to seeing you soon whenever we cross our 11-month milestone. And till then, we'll wish you happy investing and a great week ahead, right? Thanks a lot.
Thank you, everyone.